we'll get started. So obviously, you and I go a long way back, but it's a pleasure to have you here. We have worked together, and you have been a partner and a friend, but more importantly, a mentor who let me take a crack at the frontier in emerging markets in the last 10 years, and also in my passion to give something back to Pakistan in the form of introducing Swedish-style pension system. You have been a supporter of Mahaana and investor as well. But I'll let you introduce you for like 30 seconds to a minute about you and your background for the others.
Sure. So I'm one of the founders of the Tundra Fonder. Been doing emerging markets for the last 27 years. I was one of the first investors ever who invested in Russia. So that eventually led me to look into kind of new investment opportunities. Came across Pakistan in 2005. And as everyone else, I was kind of blown away with the prejudice that I had before going in and what I actually found on the ground. So I think Swedish people in general are not, they don't have a lot of prejudice. If we see that things are working in a different way than we expected, then we adapt. And we saw a great opportunity in Pakistan. And I think the years when we started a Pakistan fund in 2011, that actually helped us grow Tundra to an emerging and frontier markets player. So we have a lot to thank Pakistan for during the last 13 years that we've been in business.
I agree. You have been one of the great supporters of Pakistan, especially comparing Pakistan with India all the time. But how has been the journey in the last 14 years?
Well, I think we started, Tundra started, the first product we had was actually a dedicated Pakistan fund. And people laughed at us when we started in October 2011. Then came 2012. We had the kind of the tax incentives to invest in the market. The market started running while the European markets were completely flat. Swedish retail investors in 2012 constituted 2/3 of the foreign portfolio inflow in Pakistan when the market turned. And for 5 years in a row, the Pakistan Equity Fund was actually one of the 10 best performing equity funds in Sweden. And we were eventually actually nominated for being the most investor-friendly fund in Sweden. So I think that we started in a good way. We were lucky with the timing. 2012 to 2017 were great for the Pakistani market. Then, of course, came all the problems. I think the inclusion in the MSCI emerging markets was a kiss of death. And at the same time, no trouble started surfacing. We had a political squabble with the sheriff. We had PTI suddenly coming up as kind of a dark horse. At the same time, things were crumbling in emerging markets. And Pakistan, as you know, is a very, very sensitive market in terms of its external balances. Ran into problems. The new party, PTI, tried to mend things, but were eventually pushed aside. So I think we've now seen almost 6 years of a lot of trouble and a lot of squabble in the market, which has hurt investor sentiment, and which then means that the average valuations have gone from 8 to 9 times earnings down to 4 to 5 times. So that's where we are. Now we see a kind of a fresh start. Most of the crisis around us has kind of been cleared away. We expect lower interest rates coming up. So hopefully we can have a better cycle ahead. But let's see.
Absolutely. And if I recall correctly, we had like at one point in time more than $250 million in the Pakistan market.
Yeah.
And unfortunately, we have been the largest at that time.
Yeah. And I think it shows the potential. I think any market that delivers returns to its investors will have interest. So I think we've seen several such periods in Pakistan's time, but unfortunately we've seen more of the worst times. And when investors have all the options in the world around them, they will avoid the bad markets and they will go for the better markets, like India, for example.
Yeah. But like post 2017, obviously, as you briefly mentioned, what happened has been a shaky path for most of the investors. Uh, as you know, Pakistan just went through elections in last couple of days, and surprisingly, it was a bit different as expected. How do you see that elections, and also like comparing that with the recent Bangladesh elections, because the similar pattern was also repeated there, but somehow Pakistan remains more turbulent than Bangladesh or any other friendly market.
Yeah, I think we had, to be quite honest, and I've written that openly on LinkedIn once back in 2019. We were very hopeful when PTI came into power because and I think you never know what politicians will do. We had our kind of concerns around Imran Khan. It was too confrontational. It was too focused on making all the wrongdoings right again. But he had the support of the people, and he's put some smart people in place, and we liked what they were saying about reforms. As everyone else, we were a little bit disillusioned when we concluded that he was not going to be allowed to stay around. I think the new realization is, in my view, and I think we need to be frank about that, it's the military that's running the country right now. And we expect a government that will have the support of the military coming in. Last time, I think it took 22 days before we had a new government in place. And I would expect that even if we're going to see a similar time frame here, is probably, I think the best probability from my view as an investor is probably to expect a government that has the military support.
Yeah. And as we are expecting, there would be a hung parliament and with a very, very strong opposition. How do you see that? Will that bring stability, or the actual reforms that Pakistan needs to take? Will that become a reality, or we will have another crisis shortly?
Well, I think there are 200 million Pakistani political experts in Pakistan. My view is just one of those views. But if judging by what I've seen in the last couple of years, I think it's clear now that it is the military that is calling the shots, which probably means a higher likelihood of whoever formally sits in government will have some kind of unified policy. So I do actually, I think the flip side of that, this is not about talking about democracy or taking a stance on all of that. We just have to realize how things look like. And I think the reality is that it's the military that is controlling the country. And that probably means that the policies will be approximately the same, regardless of who kind of nominally sits in government. That's just the way we need to interpret it right now. So I don't really see a major risk from whoever sits in government. No.
Okay. Makes sense. And I guess a similar model in Bangladesh was also there for some time, when one single party with the backing of army, and they actually brought those required reforms along the way. I guess the only difference is that they were allowed to complete the 5 years tenure and then another 5 years and so forth. But in Pakistan, every 3 years, maybe. Do you agree with that? Like whoever sits in the government, they should at least be given the full 5-year term to make the policies implemented.
Yeah, but I think that is a general problem in politics, and especially in vulnerable countries like Pakistan. Is that there was one politician that once said, we all know what to do, we just don't know how to get re-elected after we've done it. And I think that's a story. There's too much short-term thinking. Politicians need to be short-term because they need to prepare for the next election. So I think in that sense, it is difficult to be a politician in a country like Pakistan. So what we see around us, so you take Bangladesh as one example, example, now Awami League has been in power since 2008. They've been highly criticized for how they've treated the opposition and civil rights and everything like that. But for some reason, they have the support of the international lenders. They have the support of the US, even though you can hear some voices against them there as well. So I think the biggest problem in low income and low middle income countries is poverty. And I think anything that they kind of decrease poverty will eventually lead to less corruption, will lead to more democratic rights being instilled. But it's a frustrating journey. It is, and you can't say that you like what you see, but it's the reality. And I think the overriding goal needs to be that decrease poverty and things will improve, even if it will take time.
Absolutely. And if you recall, like we used to consider Pakistan to be a future breakout nation. Has it become a breakout nation, or at least on a path of that, or in your opinion?
I don't think so. I think we've been disappointed by that. I think when Tundra went into Pakistan initially, we saw a lot of opportunities. I think for any nation that will truly kind of break out, it's not enough with the equity markets. You need foreign direct investments. In order for that, there needs to be a stability for investors. They need to be able to bring capital in and out freely. They need to be able to get the components and the raw material they need, and they need to be certain that they can get this money out once they produce the goods they're gonna do. Tundra had we actually did some unlisted investments, and we ran into problems into most of them because the people that we were dealing with, they were simply not honest. And we didn't get any support from authorities. We felt that we were left pretty alone in those situations. So we took a decision never to do unlisted investments in Pakistan again, and that board decision still stands. It's much easier for us to handle the listed equity market because, believe it or not, but the regulation by the SECP in Pakistan, it's actually very good, and it gives a lot of protection for investors. So we need to wait with foreign direct investments until there is someone who can actually guarantee your investment and can help you if you run into problems. And so I think it will take time.
I agree. I recall that stint that we did, obviously for the larger good of the market, and it didn't turn out as it was expected. But it's not just us. I think what recently has happened, like all the multinational companies are also leaving the country. Whether we look at the Telenor, we look at larger pharmaceutical like Sanofi and so forth. I guess they're all running into similar sort of a problem. And now with the repatriation of dividends, that's another problem for the foreign investors. So I think FDI seems to be a distant dream rather than something like kind of close by, unless we kind of have stable policies, irrespective of which government comes into place, and so forth. But right now, I think Pakistan needs to work on stopping the MNCs, the multinational companies, to leave the country. Is there any suggestion that how should they do it? Because as you said, everyone knows what to do, why they're leaving, why they're not happy. But what can be done to fix that?
Well, I think first of all, and this is now I'm talking from a kind of a pure, very, very crass investment perspective. If there was someone in Pakistan that say you would have a go-to person, a go-to organization, which you could actually get help from if you have any sort of problems, that will be there regardless of which politicians that are currently in place. I think that's a starting point. If you look at successful countries like Vietnam, for example, they have investors know who to go to, and they know that they will fix it. So I think and now I'm being very, very, this is, it might sound insensitive, but having one power in place that you know is ruling and gonna continue to rule after the next election is probably could potentially make that equation easier, because you would know who to go to. You would go to COAS if you ran into problems. Eventually, Pakistan needs to fix this some other way. There needs to be kind of a reliability among the politicians that are in place. Those politicians need to feel that they can take the tough decisions. But I think to start with, you need some sort of guarantor that you know can actually help you. That's our experience, that we had actually no one to go to. So let's see, with kind of the new kind of ruling that we have in Pakistan now, that maybe that is actually, from a pure market perspective, something that could actually help getting more foreign investments into the country, that they at least they know who to speak to.
I agree. I guess that's the call of, like, from every segment, even not just the foreign investors, I would say from local investors. And this boom and bust cycle actually correlates with the political instability between Islamabad and Pindi. Now when I'm on the ground, I can feel it. It's not just the foreign investors, it's for all the business community. And as you said, I think at least the intent is there with the SIFC being in place, which will actually look after these interests. But how successful that would be, we still have to see. But like in terms of the reforms and policies, obviously you have in Africa, in Vietnam, in Bangladesh, and obviously when Vietnam, I still recall when I first visited Vietnam and came back to Stockholm, I said Pakistan's here, Vietnam is here. And today Vietnam is there and Pakistan is nowhere. So we have seen those countries like Vietnam, Bangladesh, Kenya, Ethiopia, for that matter. They've actually slow, but like at least in a consistent manner, move towards the growth, towards the poverty elevation, and also towards the FDI and making their country more receptive of the foreign investors. What kind of reforms and consistency in policies that you would like as a foreign investor?
I think it's both very, very difficult, but it can also be explained very, very simply. I think what you will need, if you think of yourself as a foreign investor, so you want to put up production in a country, what you need to freely be able to move the equipment that you need into that country. You need to be assured that the license that you have is guaranteed for the life cycle of your investment. And you need to be freely move the currency out of the country once you produced what you want to. You need a long-term tax agreement. So if you have those things in place, that's all you need really, because the rest of it, as long as you know that you can fix it, if you need a certain component or a new machinery, you will be able to get it. You will not get stuck in a 3 months paper trail, and you will be able to repatriate dividends should you want to. Hopefully you want to reinvest. And if the investment climate is attractive enough, you probably want to reinvest. But you need to trust the people that you speak to, and those terms that you get when you sign off, they need to stay in place. They can't be eventually criticized or be torn down. But you know how it is. You're an entrepreneur yourself. You can fix anything as long as you can actually do anything, as long as you can do what you need to do. So getting Pakistan to that place, I don't know, but it shouldn't be that hard.
No. I agree, and also we had a great opportunity with the CPEC at that time. And I happened to meet the Deputy CEO of China Harbor back in 2016. And he told me that we want to buy everything in Pakistan. So whether it's textile, whether it's packaging, whether it's energy, And again, because of the inconsistent policies, they were left high and dry, and they have gradually moved. So I think one other thing that Pakistan needs to do is, and that's a difficult proposition, but like bring that trust back, because now foreign investors, whether it's the governments or FDI, they have stopped trusting the policymakers. And it's not just the politicians, I guess. You recall back in 2008 when Pakistan put a freeze on the stock market. It's been like 16 years now, and those investors have not returned. How can we get that trust back of those foreign investors?
I think it's going to be a long process. I think the freeze of 2008, if you recall, Bangladesh had a freeze for 18 months that just ended last week, I think. So I think those areas can be fixed. Pakistan has there is this perception arbitrage about Pakistan that one needs to kind of overcome. The international perception of Pakistan is that half of all foreigners think that it's a country that is kind of flocked with there's a lot of terrorists running around the streets, and we're not. I can't really. I meet those expectations when I speak to investors again. I think with that, although I understand it might feel hurtful for Pakistanis to hear that perception about them. You just need to be patient about it. Just show continuously, day after day, that that's not what Pakistan is about. That's not what Islam is about, and all that. So you have that side of the story. But I think even towards those investors, having a successful investment market, a booming stock market, good terms for foreign direct investors, seeing money coming in, they will forget about all their prejudice in a couple of years' time. That's just the way it works. That's how markets work. So over the last 10 years, as we wrote in our last monthly letter, Pakistani corporates have outgrown Indian companies. India is up 200%. Pakistan is down 8%. So you already have the foundation in place. Companies are great. They're doing exceptionally well given the circumstances. Just make sure not to create too many hurdles for foreign investors, and they will, because of greed, chase those companies. And that will eventually lead to what can we do in an unlisted investment. But it requires patience, and it can't be hard words against stupid foreigners that don't understand, and etc. You just need to be patient. Think of them as children. You need to explain thoroughly, and you need to show every day that you stand by your word. So
I agree. And like obviously, you were quoting a Bloomberg data that you use. So it's and once in the presentation, we found out that profitability of the KC 100 was actually one of the highest in the world, even in the dollar terms, and so forth. And unfortunately, the capital markets could not actually catch up to those valuations. But isn't that an exact definition for a value trap? And what can actually trigger that value trap to be avoided and actually become equivalent, at least to Bangladesh or Vietnam's valuations, if not India?
Yeah, I think it's. I'm very, very careful about value traps. But in my view, value traps are companies that you expect to be revalued. It's just that it's a multiple play, that this company is trading at 3 times. I think it's going to be 9 times. And then you sit there for 10 years and it's still 3 times, right? What you need in order to avoid value traps is growth. Because then you have 2 chances of getting things right. You might argue that, well, Pakistan doesn't deserve 4 times earnings valuations. The average has been 8 times or 6 times over the last 5 years. But if you also have growth, that means that your 4 times multiple next year will be 3.6 times. Then it's going to be 3.3. There is a limit to everything. If you provide growth in US dollars, and recall again that even if you have interest rates at 15, 16%, if you're talking about US dollar growth, then you're not going to use the local interest rate for your weighted average cost of capital. Then you should use an international weighted average cost of capital. So I think it's as long as it's growth, I'm not concerned. But I would never buy a company simply, or a market simply because it's cheap, because it's cheap. Maybe it will remain cheap forever. But if it's growing, then it's I think it's completely fine.
Yeah. That I agree. So at least one component of that, Pakistan has it right, hedges growth in the profitability of the listed sector, and so forth. The other thing, obviously, which is a bit of a problem for every multinational and all the foreign investors is repatriating the dollars. But if we look at the numbers, I think the government doesn't have dollars. So how to fix that? Because I think reliance on IMF cannot be a sustainable long-term solution. And gradually, we have seen IMF getting more hard on the government for lending even $1 billion to a 250 million population. How to get rid of that, and especially comparing with the other countries globally that you invest in?
I think, to be fair to Pakistan, is actually that there's a lot of countries that have had problems with repatriations, low income and low middle income countries last couple of years. I would say that Pakistan has been one of those that have handled it better. We have not noticed any significant problems in Pakistan, as opposed to Sri Lanka or Egypt or Nigeria or Bangladesh, or a lot of countries have been into problems. I think, of course, the theoretical solution to creating more dollar is, of course, to create a bigger export base and to get dollar into the country that way. The other solution is, of course, a continuous depreciation of the currency until you meet supply and demand. And I think that's where Pakistan is, or has been for the last 10 years. So I think it's, for us, for example, some of the investments we have, for example, in the IT sector, that's a typical sector that could grow multifold. There's no reason why Indian IT companies should be, 200, 300 times bigger than Pakistani IT companies. There's a great potential there. You have good examples also in the ready-made garment sector that can also increase. But we need more foreign direct investments in order to increase the export base and to utilize the benefits that you have with the young population and that's kind of eager to improve. So, but it's a long-term game, and at the end, all investments are real assets. So the solution right now are these boom and bust cycles where hopefully investors will get a decent dollar return at the end, which has so far been the case. So
I agree. And also, one of the changes in the global market that's happening is the sustainability. And obviously, Tundra launched the world's first sustainable fund for the frontier market back in 2015. And I still recall in COVID times, we went all our funds sustainable, and we had to get out of a few of the investments which we liked fundamentally, but could not actually meet the criteria of the sustainable development goals. And I know that you do the scoring for many companies that you invest in terms of the ESG side. Where do you see Pakistan standing there? And what are the risks that maybe even if we're growing, like for example, oil and gas, even if it's growing 200%, but it's not investable by you, what needs to be done there?
Well, I think the understanding among Pakistani corporates is increasing. That's what we see in our scoring. We've actually had I would say, I haven't looked, of course, not looked at all ready-made garments companies in Asia, but I do feel I'm confident to say that we have one of Asia's best ready-made garment manufacturers in our portfolio, which is a company called Interloop, which is very well known. And I think the reason why they are so good is that, of course, that they came in contact with international clients and they understood the expectations from international clients. So they made it a competitive advantage of sustainability. And look at them now, the most successful ready-made garment company in Pakistan. So sustainability, first of all, needs to be profitable. That's the first key, because you're not going to convince cement manufacturers to take $1 billion investments unless they can get some worth out of their investment. In general, when we look at Pakistan, they are among the 10 countries that we invest in. Pakistan is somewhere in the middle. They're behind more developed nations like Indonesia and Philippines. But they are, I think, the companies that we have invested in, we believe strongly that those are companies that can actually bring the society forward. And at the end, that's what we're looking for. It's a kind of a holistic view of companies that we believe do good for society, that the politicians, regardless if it's PTI or PMLN or the military, regardless of which politicians are in place, they will support this business because it's good for them. It makes them look good, if you want to put it that way. So if you look at companies like IT sector, like systems, for example, they train people, they get export revenues to the country, they increase the human capital of Pakistan. Of course, any politician wants them to succeed, right? Interloop, important export of ready-made garments. They can make everyone in Pakistan proud of the work that they do in the sustainability area. Of course, the politicians want them to succeed. So I think that's the key. It's finding the good companies that can navigate the circumstances in a difficult environment. And that's what we're focusing on.
Makes sense. I agree. But also, like, I believe your investment portfolio is around 15 plus countries, primarily in the emerging and frontier markets. And obviously, all those countries get affected by what's happening globally. So we are seeing some paradigm shifts there as well, in terms of the war still going on. We already have Russia-Ukraine, now we had a Middle East sort of crisis going on, and we have high interest rates. How do you see that affecting that overall in terms of the frontier emerging market, and then particularly Pakistan?
Well, I think obviously we've gone through a couple of rough years, which we had a crisis already before COVID that we were just recovering from. Then COVID came, and of course, countries like Pakistan and other lower middle income countries, they did not have the deep pockets that you had in Germany or the US to kind of stimulate your way out of it. So they had to kind of take their hits and be cautious with their spending. The stage we're in right now, after COVID, of course, then came Ukraine, Russia, and we had a spike in commodity prices, and all hell broke loose, you might say. But I think now we're starting to recover from that. All around the world this year, although it might be slower than many hope, we will probably see the start of lower interest rates this year. And probably for the next 2 years, we will see kind of gradually declining interest rates. In our perspective, we don't expect the US and Europe to repeat what they did during 2009 and 2022, which was zero interest rates, even negative interest rates for some time. I think they've kind of learned their lesson that there are some negative impact from that as well. So I think we're entering a climate with kind of more normal interest rate and interest rate expectations. And I think emerging markets in general, who did not overspend during COVID, whose debt levels overall are a bit lower than developed nations, and who everyone understands are subject to kind of more normal structural growth as they kind of decrease the gap towards the richest nations. I think that's going to be a decently favorable spot for investors in the years to come. Because when we had zero interest rates, even negative interest rates, you had these anomalies like unprofitable startups that were started. You had real estate investments where you could invest at 2% and you can borrow at 1%. We're not going to see that. So competition will be less, and emerging markets will probably look like a quite favorable place. If we come to our markets, which is the smaller emerging markets, the lower middle income countries, they are kind of the tail of what's happening in emerging markets, or you can even call them the whip, so kind of the tip of the whip. So when emerging markets interest starts coming again, then the smaller emerging markets, they will come with a little bit of lag, but many times more kind of forceful. It will go faster because liquidity is lower, it's going to be crowded in the door, etc. So I think the next couple of years, regardless if it's this year or in the year after that, I think the climate for emerging markets and the smaller emerging markets will improve. And equity markets move with improvements. They don't move because things are great. It's the improvements that drive prices.
Makes sense. And one last question before we get to the questions is, like, obviously you're not just an analyst, you're actually a company who has a decent amount of funds to be invested in the emerging markets. Would you invest in Pakistan right now, or would you wait? And what kind of allocation you think Pakistan deserves generally?
Well, I think we have two major mandates right now. We have our the Tundra Sustainable Frontier Fund, which is focusing on lower middle income countries and low income countries. There, Pakistan is our second biggest weight after Vietnam, and it's one of our most successful investments since we started the fund 10 years ago. I think in our view now, what we want to see the new government in place. Want to see what's happening there. But generally, as we wrote in our last monthly letter, now we expect things to improve. Interest rates will be lower. Investors completely misjudged how corporate profits would develop during the crisis, and they need to catch up when interest rates start coming down. So I'm quite positive, but we of course we want to see that who's going to run the country, how will it look like, are they making kind of decently reasonable decisions. We also have kind of the bigger fund, which is a new mandate of around, it's much bigger than the smaller fund, and there we kind of that's kind of a broader mandate. Pakistan is too small to be part of that. Liquidity is too low, so we're not going to include Pakistan there, regardless what we think about the market.
Makes sense. And are there any structural growth sectors that you're excited about? I'm sure you cannot name that the particular companies for obviously a genuine reason. Is there any broad sectors that you think where the structural growth story exists?
I think a country like Pakistan, most sectors are subject to growth. If you're good at something and you have good management and good owners in place, most parts of the economy will grow. Sectors that we traditionally favor a little bit more is the IT sector, which I think in Pakistan's case is kind of an apparent long-term winner. We also like the healthcare sector, which is a long-term structural growth sector for us. Outside that, it's going to be about specific companies. We're not very much into kind of generic business like ready-made garments, etc. But if you find a company who can who can create their own competitive advantage from it, then it's a great opportunity as well. So we don't invest in kind of cyclical sectors where profitability is set by other factors than the managers themselves. So we're staying out of sectors like cements and energy sector and those kind of sectors. So we're trying to find kind of the companies that can kind of create their own destiny. And there are many such good companies in Pakistan, and I hope that they get the chance now to show what they can do.
Makes sense. I guess maybe we can hook from a few questions from the audience. I guess there's a long list. I think you have already answered most of them, and some are very particular, like will Pakistan default in next 2 years?
I personally think not.
I think obviously that the emotions are running high in Pakistan, so we can expect such questions.
I think it's. I think the big difference in Pakistan is if Pakistan is going to default, it's going to be because of political reasons. It's going to be their relationships with the bilateral lenders and multilateral lenders, and I think we can all speculate on that. But at the end, that's going to be about politics. It's not going to be the Eurobonds like in Sri Lanka's case that's going to make them fail. So how will their relationships be with the Gulf countries? How will their relationship develop with China? Now we can all guess about that. Personally, I think the relationship will be good, and that's why I don't think they will default. But I could be completely wrong. So
No, I think I'll second that. I think Pakistan debt situation is not that much, and most of the debt is actually G2G rather than it's of a private sector, and mostly comes from US, China, and Saudi, for that matter. So I think we just have to fix our house and put that in order. So yeah. Another question, one obviously is like exchange rate has been talk of the town lately, and everyone is now thinking it might hit 500 or might come to 200 or whatnot. How do you get affected, and how does your portfolio gets affected with that?
Well, I think we gave a good example. We've been talking about it always, but we gave a new good example in our latest monthly letter, which anyone can read. We're just showing historically that you should short-term currency movements can be scary. You saw like Nigeria had a 40% devaluation, and it's these sudden moves that can scare investors. But if you look at companies on the ground, they can't. What happens with the corporates is that they increase their prices because they have to. They need to create a decent return on their capital so that they can reinvest and continue to produce whatever goods or services they produce. So I think it's currencies are more of for long-term investors. Currencies is more of a translation effect. And we can also see that, for example, in Pakistan's case, the US dollar earnings growth, etc. It's if you have big devaluations, local currency earnings growth will look very good, but in reality, it's not. It's just a translation. So, but you shouldn't be too concerned about it because there are few ways to protect yourself against the devaluations, but I think actually equities is a decent way to protect yourself long term towards devaluations, because you buy real assets. That's what you want. You don't need to buy gold. You can just buy equities.
Yeah, and I'll add to that. There's obviously a misperception on the dollar in terms of and the best hedge for dollar is actually equity markets. And looking from your last monthly letter and the fund manager's report, most of your investments are actually hedged from the dollar depreciation. You are in the IT sector, which earns in dollars. You're in textile sector, which earns again in dollars, and so forth. So there could be an indirect way to hedge your PKR exposure by investing in the equities.
Absolutely. And I think there are more or less direct ways to do it. You can, of course, the easiest way is, of course, to look at companies' export revenues as percentage of total and their local costs as percentage of total. But I think eventually, if you look at really hurt sectors like pharmaceuticals in Pakistan, who haven't been allowed to increase their prices in line with the inflation, devaluation, etc. What you're probably going to see is that you're going to see a very quick catch up at some point when kind of it's the time to let them. So you it's just important that not to kind of bet too much on any single stock or any single sector. Just invest broadly. Remember that these assets, they are real assets. Long term, they will protect you from devaluations and inflation and all that. So.
Yeah. And then obviously, like if you look at the last year equity returns, they have been 53%, and actually they were in tolerance because rupee did not depreciate in 2023 that much. So one could make 53% in dollar terms. But I guess one issue with Pakistan is that it has not been able to present itself as a viable market and let the noise take over the signals.
I think that's exactly the case. And I don't think we shouldn't even talk about, we compare to India, but only with the corporate's earnings growth or revenue growth. That you can do, but you can't compare Pakistan's valuations with India. Pakistan is very, very far from being a 20 times earnings market. It will take decades, I personally think. But we can compare Pakistan towards how Pakistan has been for the last 10 years. Because it's basically the same story. It's the same kind of political squabble, who's really in power, economic crisis, devaluations, etc. And I don't think Pakistan is in a worse place than they've been over the last 10 years. I think they're starting to become in a better place. So I think the markets tend to kind of return to their mean, their own mean. Don't compare it to India or the US or something like that. Compare it to Pakistan, and even by that comparison, we've been too pessimistic. Foreign investors completely misjudged what would happen to corporates' profitability, and they will eventually realize it's going to be late. But it's a lot of things that are discounted in the market now.
Right. That makes sense. One question I really like is obviously that I can relate to Sweden as well, because Sweden is one of the highest tax rate jurisdiction. And even I recall I used to pay 40%. But like in Pakistan, obviously the tax rate and then the tax penetration is quite low. Given specifically from the Sweden perspective and how Sweden actually achieved that everyone was paying taxes so high and they were happy about it. I did not see anyone complaining, actually. What can Pakistan learn from Sweden in that area?
Well, I think it's Sweden did two things. That they documented the whole population, but they also gave the people incentives to be documented, because you actually provided services to them for the taxes. If you have children in Sweden, you're not going to pay anything for medical treatment, even if it's a heart surgery. You're not going to pay anything for medicines until the child is 18 years old. Dental care is free until the child is 18 years old. So I think it's documentation needs to be in place, but in order for it to actually work, then it also needs to be incentives for the population. Pakistan's taxation versus the services that they actually provide to population, I think is high. It's very high. And so corporate taxes are too high. So I think it's both legs need to grow in order for that to improve. But documentation needs to be there. And then they have to decide when can we start broadening the tax net further. But it shouldn't be that the ones that actually are registered should pay more, because they already pay a little bit too much.
I agree. I guess we are about we have reached that time as well. Is there a last message that you want to give to the policymakers and someone sitting in Islamabad and Pindi, because I'm sure they're going to watch it later. So if there's one advice that you would want to give to them to make Pakistan become a breakout nation and comparable to Vietnam or India or Egypt, or not Egypt actually, sorry, Indonesia and Philippines, what would be that one advice?
Well, I think it's that could be a very long message, but I think my experience from these 27 years that I've been roaming around these markets is that we put a bit too much emphasis on expectations on what politicians will do. Politicians should play a very small role in an economy. The only thing they need to present are kind of understandable rules for everyone to abide with hopefully as much freedom as possible for entrepreneurs, so that they can actually, when they run into problems, which they do, they can actually do something about it themselves. They don't have to go to a third person and wait for 3 months in order to get it handled. Try to kind of take away as much restrictions as possible from the corporates, and then kind of let all these good entrepreneurs and all these kind of people with a lot of drive in them, let them do the work, let them do the heavy lifting. But it's easier said than done. But it doesn't, just stability and easy to understand rules, and you don't really have to do anything more in order for the entrepreneurs and the people to create the growth for you.
Yeah. And if I would put it in one line, is like, create a long-term sustainable policies and let the private sector do their job. Would you agree to that?
Absolutely.
Perfect. That sounds good. I think thanks a lot, Mattias. You have been a great friend of Pakistan, and I always look up to you. And I guess after the session, many people will look up to you. We already have, like, how can we contact Mattias? You can log into or visit the tundrafonder.se. He has his email and contacts there. And I think he's very responsive to most of the people generally. And I hope to see you soon in Pakistan.
Yeah, we
Since
will.
Now you're in the neighborhood.
Yeah, look forward to that. Okay, take care.
Perfect.
Bye-bye.
Take care, Mattias. Have a good day. Bye.
Thank you. Bye.